All right, speaking of the banks and the financial sector is at a crossroads with the mixed views coming in for the future. While Hiren Ved remains cautious on lending, Ravi Dharamshi sees the long-term opportunities in banks despite near-term challenges, and Prashant Khemka adds perspective on PSU banks and selective opportunities. Let's hear from the experts.
I think by and large financials is still, more constrained by credit growth. You'll have to pick and choose, but on the whole, I'm not very excited about lending as a space.
I do believe the best in terms of the asset quality, the best in terms of the credit deposit ratio. The deposit growth is probably behind us. Deposit growth will remain in a 13% kind of a range. The NIMs that were compressing because of the cost of deposit, I think that should start easing with the hopefully the interest rates also coming down and the liquidity being improved through the CRR cut. So I would say one has to reset the expectations in terms of what is the kind of growth one should expect and what is the kind of return ratios one should expect. Now it will probably be a 12 to 15% grower with a 12 to 15% kind of ROE. And if one adjusts to that fact, then I think from that perspective, the valuations are now becoming really, really attractive. And one should be long on this place with a 5 years perspective.
I've been, professionally investing at my prior firm or now for coming up to 18 years in India. And we have, for most part, majority of these 18 years, we have owned PSUs. Yes, we may not own them in as big a proportion as the benchmark. But there are from time to time very attractive opportunities within PSUs, and otherwise also from a risk management perspective, we do tend to own PSUs in the portfolio as well.